Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. 13th straight day of gains coming in, on the indices, and it was a record 13-day winning streak. And of course, we are looking at extending those gains today as well, given the fact that the GIFT Nifty is hinting at a mildly higher start for the Indian market. Although we have been hitting record highs consistently, what's lacking is momentum, because we've seen the broader markets fizzle out, right? So yesterday as well, we saw the mid and small cap indices ending the day in the red. So the sessions have been fairly lackluster, although we have been hitting fresh record highs. Today, lots to talk about, lots of stocks in focus, including the likes of Bajaj Enterprises. You have Vedanta that has announced an interim dividend. You have Medi Assist. There is likely to be a block deal on this stock. So lots of stocks in focus, and of course your stock related queries will also be in focus. So if you have any queries, keep them coming in on our live feed on YouTube, and we'll try and take them up with our guest on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street was shut overnight on account of Labor Day holiday. Asian markets, meanwhile, are trading largely higher as South Korea's inflation has hit a 42-month low. The GIFT Nifty, as I mentioned, is suggesting a higher start for the Indian market. Oil prices extend losses, with the Brent trading around $76 a barrel as demand remains sluggish from the US and Chinese markets. Gold prices, meanwhile, remain range-bound above that $2,500 an ounce mark. ICICI Bank issues a clarification on the Congress's allegations against SEBI Chief Madhabi Puri Butch, saying all payments made to Butch post-retirement had accrued to her while employed with ICICI Group. The Congress has promised a response to the clarification by this morning. And there are no checks and balances in the SME public market, says a whole-time member at SEBI, Ashwini Bhatia. He warns investors about the IPO frenzy and calls on bankers to reject sketchy IPO applications. All right. On that note, then let's take a look at the FNOQs that we are getting this morning. In fact, if you look at the market, the Nifty had a fifth straight record close yesterday. The market extended its gaining streak for 13 straight days, longest on record. Of course, we will be watching out for whether or not we hit a record high today as well. The Sensex, of course, hit a fresh record high, gained somewhere around 194 points or thereabouts. The Nifty, although cooled off from the session highs, but did, climb that 25,300 mark in intraday trade. Mid and small cap indices ended in the red. If you look at the top gainers, Bajaj twins were a buzz ahead of, the Bajaj Housing IPO that opens up next week. The Nifty put call ratio dropped to 1.18 vis-a-vis 1.41 levels in the previous session. And if you look at the stocks that will be in FNO ban today, there's been a new entrant in the list, Hindustan Copper, and still in FNO ban, or the stock that will remain in FNO ban from yesterday would be Balrampur Chini. Foreign investors turned net buyers again yesterday, 1,735 crore rupee worth of buying in the cash market. Domestic investors also bought worth 350 crore rupees or thereabouts in the cash market. But without any delay, let me get on board. Our guest for today joining me is Sameet Chavan, who's the head research, technical and derivatives at Angel One. Sameet, great to have you, speaking to you after a long time. We have seen the market hitting fresh highs consistently, but it's the broader end of the markets that's losing some steam, right? But here on, do you expect the Nifty to continue going upwards? Because it has been pretty much a one-way street when it comes to the index. What is the resistance level that you'll be watching out for from a weekly perspective now on the index?
Good morning, Nandita. Thanks for having me on the show. Yes, as you rightly pointed out, the momentum is clearly lacking. But if you recall, this gigantic bull run started last year in November. Since then, barring a couple of minor profit bookings, we did not have any major correction as such. And market has been continuing its northward move, trading in uncharted territory. So when markets trade at all-time high, despite having a lot of indicators in overbought territory, we can see prices deviating far away from the important moving averages. There is no correction at all. So it would be very difficult to expect when the correction will start. But yes, market is clearly lacking momentum now. And as you rightly pointed out, the broader end of the spectrum that is not showing any kind of momentum at all. So although we are at all-time high every day, we are making new highs. It does not feel, as it was feeling 3 months back, 6 months back, or prior to that. So overall, we expect this consolidation to continue. So as far as resistance levels are concerned, since we are in an uncharted territory, if we take any sort of projection, Fibonacci projection, price extension, we do not see any major resistance before 25,700, 26,000. So if at all any technical levels are to be seen, then 25,700, 26,000, these are the important levels to watch out for. But in between, yes, we are likely to see some profit booking that we foresee as of now. So from here on, it would not be a smooth march that it has been since last 9 months. So for traders, one has to be very stock specific. If you see in last couple of weeks, there's a lot of sector rotation that is happening. So clearly, market is now seeing some sort of consolidation. So we may see, market remaining in a range bound kind of action, and at higher level, in between, you would see some intermediate corrections as well.
Hmm. Expect intermediate corrections here on. But talking about the bank Nifty, Sameet, it has been a fairly volatile last few days for the Nifty Bank Index, right? Even if it has tried to end in the positive zone, we've seen towards the end of the session it kind of fizzles out. Yesterday we did manage to end in the positive zone for the Nifty Bank Index, but here on, do you expect any kind of big moves? Because as you mentioned, sector rotation is happening, right? So do you think a lot of money will now flow into private banks?
See, in fact, banking has been the weakest link of late. If you see, Nifty is trading at all-time high. In fact, major, indices trading at all-time high. But Bank Nifty is, still nearly 5 to 6% away from its previous high. So clearly, banking is lacking the momentum. And in case, if banking starts participating from here on, will not be surprised to see, Nifty hitting 26,000 soon. But for that to happen, Bank Nifty has to surpass 52,000 mark on a closing basis with some sort of, momentum. So momentum is clearly lacking in last 10, 12 odd trading sessions. Bank Nifty is just crawling upwards. So the momentum is clearly lacking in most of the heavyweight banking counters, be it HDFC Bank, ICICI Bank. After a stellar rally, it has started consolidating. Axis Bank, if you see, it has been consolidating with some sort of negative bias. PSU banks, barring yesterday's trading session, there has been no momentum from the PSU bank. So for if Nifty has to continue this northward move with some sort of momentum, Bank Nifty has to surpass 52,000 mark on a closing basis.
All right, that's a view on the Nifty Bank Index. But within the banking pack, I want to get in your thoughts on ICICI Bank as to how it's looking on the charts now. Of course, it has been in the eye of storm. There have been allegations that it continued to pay salary and ESOPs, to SEBI chief, even post her becoming the SEBI chief. But of course, the bank has refuted the allegations and said that it has not paid or granted any ESOPs to Madhavi Puri Buch post her retirement. In fact, it has not paid anything other than retiral benefits to Madhavi Puri Buch. Yesterday, of course, we saw the stock ending, in the negative zone. No big moves, but mildly in the negative zone. But within the banking pack or private banking lot, this bank or this stock has done fairly well compared to peers. Here on, would you suggest a buy on ICICI Bank, or do you think stocks like HDFC Bank offer a better risk reward?
No, from a momentum perspective, definitely ICICI Bank stands out as compared to HDFC Bank. But one has to see risk reward as well. If you see ICICI Bank after correcting from the levels of 1260, this particular stock, formed a base around 1160, which coincided with the 89-day exponential moving average, and then it started moving upwards. Now it is approaching its previous highs of 1260. So, after rallying nearly 6 odd percent from recent lows, it is now approaching its previous high. It would be very difficult to give any sort of, buy call at current level. Yes, but on declines around 1160,
Hmm.
1180, it becomes a good buy, but not at current level. One should rather wait for a decline to happen or else wait for a breakout to happen beyond 1260. That would trigger, the next leg of the rally for ICICI.
Hmm. What about Vedanta? The stock has seen a good momentum in the last 1 month. I think it's up somewhere around 15% or thereabouts. There is news flow. The company, of course, has been simplifying its, corporate structure. It has been, retiring its debt as well. And now, of course, it has, approved the third interim dividend of 20 rupees for FY25. This is the highest dividend payout since April 2023, and it has now paid somewhere around 35 rupees per share as dividend to shareholders in FY25 itself. A 15% up move in the last 1 month, Sameet. Metals, of course, as a pocket, are fairly volatile, reacting to global developments. Over the weekend as well, we had China manufacturing PMI coming out, and it was disappointing. So no recovery as such happening in China. But from a momentum perspective, would you look at Vedanta as a trading play now?
Yes, certainly looks quite interesting. In fact, it has been bucking the trend. If you see the entire metal space, it is undergoing some sort of profit booking. But this stock has been outperforming some of its peers. It is on the verge of a breakout. This stock has been moving in a kind of rectangular pattern, and now it's challenging its higher boundary, which is placed around 475, 476. So once Vedanta surpasses 476, we can see a short-term breakout happening in this counter, and then the stock can give a immediate move towards 490, 95 odd levels. So yes, looks an interesting counter. Wait for a breakout to happen beyond 476. If that happens, then as a trader, one can keep a stop around 466 and go long for a target of 492, 95 for Vedanta.
Hmm. Okay, that's about Vedanta. We just have 3 minutes to go for the opening bell. But before that, I want to get in your thoughts on the entire four-wheeler pack. It is lagging the two-wheeler stocks, right? But yesterday we had stocks reacting to their auto sales figures for the month of August as well. Maruti's sales were down somewhere around 4 to 5%. That was on expected lines on a YY basis. But August production is up somewhere around 2% or thereabouts, slightly higher on a YY basis. The stock hasn't really been firing up, so to say. Last 1 month, we've just seen a 2% kind of an up move. And that, of course, after a 20 to 25% kind of an up move on a YTD basis and a 1 year basis. But would you expect four wheelers to fire up now? Because two wheelers have had a dream run. So here on, do you think two wheelers will continue to rage on and four wheelers will continue to consolidate, or do you think chartically there could be some possibility of a breakout on some of these stocks like Maruti?
See, we think the entire auto space has done remarkably well in last couple of years. In fact, when the rally started in 2022, auto has been the one of the leaders who initiated this particular massive bull run. Now, yes, after seeing a massive rally, some sort of consolidation is quite obvious, and this is what we have been witnessing. So we would expect this consolidation to continue in some of the four-wheeler names, wherein Maruti, if you see recently, this particular stock clocked its all-time highs somewhere around 13,800, and then gave a sharp nosedive. So this stock would consolidate for a time being, wherein the strong support, the sacrosanct support remains around 12,000, 12,200, and on the high side, 13,200, 13,400 remains to be a strong resistance. So we expect consolidation to happen within this broad range, and we don't expect any major breakout at least in that.
Okay, no major breakout expected in Maruti. But very quickly before we head into the opening bell, I just want to ask you your thoughts on a matrimony.com. This stock is in focus given the fact that the company will be considering a proposal for buyback on the 5th of September. In pre-open, of course, the stock is showing somewhere around 13% higher. 839 or thereabouts. That's what the level is looking like right now. Fresh 52-week high. Uh, Matrimony, does the chart look exciting?
Certainly looks attracting, and the volumes that has this particular stock has given along with the massive rally in last couple of weeks, it certainly suggests that the stock is likely to do well in the near term, but the low hanging fruit is already gone, so one should wait for a decisive dip to happen somewhere around 750, 740 to get into this counter. Those who have been holding it, they should stay put. Next
Hmm.
levels to watch out for would be around 860, 870.
Okay, that's the view on Matrimony. But of course, we have had the first ticks on our screens. The first tick was positive, but we have given up that, up move, and we are in the red as we speak. A very lackluster, flattish kind of open, as has been the case over the last few days. The Nifty is holding on to that 25,250 mark, just about 18 odd points lower at the current juncture. Sensex as well, holding on to that 82,500 mark for now. But right now looks like the broad end of the markets is faring well, because the mid cap index is holding out in the green, up about 0.2% or thereabouts. So Bank Nifty is slightly in the red. Remember, it's the Nifty Financial Services weekly expiry today. So the entire financial pack will be in focus. And in terms of other sectors, let's see how the auto pack is doing. That was among the laggards yesterday, barely in the positive zone. Bank, of course, as I mentioned, is in the red. FMCG, that was the top sectoral mover yesterday, is trading with mild gains. IT is in the red. Metals, after being in the red yesterday, some bit of a rebound, not exactly a very big rebound, just about trading in the positive zone. Pharma was the laggard yesterday, up somewhere around 0.2% today. So it's a fairly lackluster start, with no sector really taking the lead here. All other sectors are trading mildly higher, or just about 0.5% higher. So pharma and even realty, pharma and realty, these are the two sectors that are doing well as of now. Volatility index, India VIX is slightly higher, 0.2% up. So 14, that level crucial, and it's trading above that. Let's also take a look at the individual movers then on the index. Hindalco was among the top laggards yesterday. Today is it's the top Nifty gainer as we speak. Hindalco, HDFC Life, Sun Pharma, you have TCS, Coal India, Tata Consumer, Tata Motors, Cipla, ONGC, some of these names doing well. On the flip side, Bajaj Finance. So Bajaj twins were among the top gainers yesterday. Today, Bajaj Finance is under some bit of pressure. Of course, Bajaj Housing has declared its IPO price that's somewhere between 66 to 70 rupees a piece. So Bajaj Housing Finance IPO price band is out, but Bajaj Finance top laggard on the Nifty, down 1% or thereabouts. Aside of that, you have Bajaj Auto that was gaining yesterday, under pressure today. Tech Mahindra, there's a sell call by a brokerage house reacting to that. JSW Steel, Titan, Infosys, HCL Tech, ICICI Bank also in the red, and so is Apollo Hospital. So all in all, a very flat start. We'll have to see how the day really progresses to catch a trend, so to say, and whether or not we manage to extend the winning streak to a 14th day or not. That of course we'll get to know later in the day. But looking at the texture of the market right now, Sameet, any stocks that you would be recommending for our viewers?
See, in such sort of, we expect some of the defensive names to do well in such, sort of sluggish market. So ITC is the one stock, that certainly looks quite good. Yesterday, this particular stock managed to give a decisive close about its important level of 509. And today, after muted start again at lower levels, this particular stock has started attracting some buying. So we expect ITC to do well, wherein with a short-term view, 518, 520 is the next level to watch out for. As a trader, one can keep a stop around 506, and as I said, 518, 520. These are the immediate targets to watch out for. Apart from this, the entire defense piece is attracting some buying interest, and Mazgaon Dock is the one stock that has given a decisive price correction as well as time correction in last 1.5 months. It has reached its important support level. So we expect Mazgaon Dock to do well in coming days. It is trading around 4375. There's a strong support around 4,000, 4,100. So this, it becomes a very good positional play wherein one can keep a stop around 4080, and we would expect this stock heading towards 4700 in the coming
weeks. Okay, those were the recommendations from Sameet. But Sameet, since you mentioned about consumer stocks and defensives, we have a report from CLSA on consumer companies this morning. They are overweight on Zomato, the target price of 350 or thereabouts. They have an underperform rating on Marico with a target price of 470, and HUL also, with respect to that, they have an underperform rating with the target price of 2,161. Of course, quick commerce is something that's reshaping India's retail supply chain by flattening the distribution. and that's where traditional companies like Marico and HUL will lose that edge, because that edge is now moving to these quick commerce companies like Zomato, Zepto, etc. When I talk about Zomato particularly, what are your thoughts? Because the target prices are ranging above 300 and between 300 to 350. How long or when do you expect the stock to hit these kind of levels? Some bit of consolidation has kicked in the stock after the kind of up move that it has seen. And on our feed as well, I had seen a query on Zomato. Utsav Jain has written in, said that he has Zomato at the rate of 256 rupees per share and he's making a loss of 5%. What should be the play here? Should he hold, average or sell? So any thoughts here on Zomato first, and then the traditional names like Marico and HUL?
See, Zomato is a tricky play now. If you see last 12 odd months, the stock, from two-digit territory, it has reached a 250 kind of mark. So in such a short span, stock has already given massive rally. So some sort of, pause, time-wise consolidation was clearly on cards. And yes, stock has corrected a bit. So, those who bought it in two-digit or probably around 100, in case of any consolidation or price correction, this stock would give some sort of cushion. But those who have bought it recently, say about 200 to 50, so they would see some sort of pain in coming weeks. So we expect some consolidation to happen, wherein in between you would see profit booking happening as well in this particular counter. See, any important level to watch out for would be 220, 230 kind of zone, wherein we can see multiple moving averages converging. So 220 is the level to watch out for in case of price decline. Any price decline, this important level is likely to act as a sheet anchor. So one should stay put, but it would take some time now to reach that 300 or to reach that glory towards.
Hmm. Okay, that's the view on a Zomato. Hope that answers your query as well. But before we move on to other queries, I want to get in your thoughts on Hindustan Aeronautics. This stock is in focus today. Of course, the cabinet has given its nod to procure 26,000 crore rupee worth of order for 250 aero engines of Sukhoi 30 MKI. That's for the Indian Air Force. Now, stock is reacting to that. It's up 3.5% or thereabouts. But Antique has come out with a report on the basis of this news. It has a buy rating. Target price is in excess of 6,100 rupees on this particular stock. And it believes that the order win will further bolster strong order backlog of 94,000 crore rupees that was there by FY24 end to 1.2 lakh crore rupees. Now, this will also give better revenue visibility of 3.8 times trailing 12-month revenue, and near-term financials could be a little bit volatile because there are execution challenges that the company is facing, but the stock looks attractively valued with multi-year double-digit earnings growth potential. That's what Antique has to say. But given the fact that all these stocks had already seen quite a good run, then we saw some bit of consolidation, and now it's sub 5,000 levels for Hindustan Aeronautics. The 52-week high is somewhere around 5674 or thereabouts. Do you expect or do you concur with the bullish view that Antique has taken on this stock?
See, we would agree, this particular, theme, the entire defense space has given stellar moves in last couple of years without any major, price correction. Now, after seeing, massive rally, we are seeing some sort of, time correction in between. Yes, profit booking has happened in this space. So as far as HL is concerned, with a, broader view, will not be surprised to see this stock even retesting 6,000 or beyond levels. So we are quite upbeat with a short to with a medium to long term view. But with the short term view, the stock has stuck in a range. It has slipped into a consolidation mode. So on the higher side, 5,500, 5,600 would act as a resistance. Low side, there's a strong base, that is happening around the 4,500 to 4,200 kind of zone. But with a clearly momentum view, once this stock surpasses 1,400, 1,440 kind of mark, we would see immediate, 4 to 5% up in this particular counter. So with the momentum perspective, one should wait for a breakout to happen beyond 1,400, 1,420, and then go long for a target of say 5,200 or 50.
Okay, that's the view on Hindustan Aeronautics. But let's take up some other viewer queries that we are getting this morning. SBI card. There's one query that's coming on this particular stock from Jiffin. He wants to know your thoughts. He hasn't really mentioned his time horizon, but let's look at the charts first. Last 1 month, it has been okay, doing okay-ish, a 6% kind of an up move, but it has been fairly sideways if you look at the long-term charts or medium-term charts, so to say, 6-month chart, hardly done anything. So SBI card, if somebody has it, should one look at moving on to other stocks or should one just wait it out?
In fact, it is showing some early signs of revival. Although stock has done nothing, it has been a laggard since last many months now. It has not participated in this bull run. But last couple of weeks, price action looks quite promising. Stock has rallied from the lower levels of 690, and it has rallied with robust volume. So that provides some sort of credence to the move. Hence, once the stock surpasses 750, we could see a good move in this product counter. One should certainly stay put, especially after giving a decent rally, a volume-based rally in last couple of weeks. Once the stock surpasses 750, yes, you could see some momentum, kicking in this particular counter. And then the next level to watch out for would be around 780, 800 for SBI cards.
Okay, that's the view on an SBI card. Jiffin, hope that answers your query. The next query, I'm not getting the person's name here, but wants to know your thoughts on NHPC. Now, this stock, has been declared a Navratna by the government. Yesterday, the stock was fairly active as well. Today, it's, not doing much, trading flat. But any thoughts on NHPC? Not very far away from 52-week highs.
Clearly, volumes are missing in this counter in last couple of months, in fact, and that is the reason we are not seeing any sort of momentum in this counter. So till the time this stock does not complete its time-wise correction, the volumes needs to pick up. We could see this consolidation continue. As of now, there's no clear sign when this particular counter would come out of its condition zone. Level-wise, 102 is the level to watch out for. That would be a first sign wherein the stock would, consider giving some sort of momentum. But as of now, we expect this consolidation, with lackluster move.
Okay, volumes clearly missing here, but that's the view on an NHPC. But Vedant Jain wants to know your thoughts on an IRFC. Now we all know that railway stocks have actually been chugging along. In fact, no great moves coming in after the rip roaring rally that we've seen in railway counters. IRFC in particular has hardly done anything in the last 1 month. It's been very sideways. So IRFC, should one really average at current levels then? Do you think that the up move that we had seen has just taken a short-term pause? What are your thoughts?
See, I mean, this has been the pattern of late. Most of the, counters or sectors that have performed well in last 1.5 years, they have started consolidating a bit. So, similar to previous stock that we discussed, NHPC, IRFC is also lacking momentum, which can be seen with its dry down volumes. So as of now, we don't see any clear signs that says if one has to average it out, then wait for further price-wise decline to happen somewhere around say 160, 140 kind of zone, wherein we see a very strong support for this product counter. As of now, the stock has is not doing anything till the time volume does not pick up. This lackluster moves likely.
That's the view on IRFC. Hope that answers your query. Debu K wants to know your thoughts on Astral. This stock has been stuck in a downtrend. Last 3 months it is down 10%, 6 months as well, and even 1 month. I mean, it hasn't really been able to stage a good rebound. So any thoughts on how Astral is going to perform now? Do you think it's going to be in that downtrend, or do you think it could be in the oversold zone now after the kind of correction it has seen?
Yes, it's in an oversold zone, but we don't expect recovery happening anytime soon. So after a decent price correction, generally prices tend to move in a time-wise correction. So we could see some sort of time correction happening probably for 4 weeks, 6 weeks, or even for a couple of months. So as of now, there are no signs. Yes, one thing is clear that 1850, 1800 seems to be a sacrosanct support for this counter until the time Astral holds that important mark. There is no reason to worry for. But once the stock breaches 1800, then yes, this stock could lead to a massive price correction. So as of now, the stock is likely to continue its consolidation phase, wherein on the higher side, 2000, 2050 would act as a resistance, and lower side, 1850, 1860 would act as a very strong support.
Okay, those are the levels to watch out for on an Astral. Next one's coming in from Satya CK, wants to know your thoughts on an Emphasis with a 1 year time horizon. This stock is coming off good gains in the last 1 month. The mid-cap IT as a pocket, I think, has done okay along with large-cap peers. 16% higher for Emphasis over the last 1 month. So, in terms of yearly forecast, would you look at levels of 3200 surpassing 52-week highs, or would you be hopeful of higher levels?
Certainly looks quite encouraging, this particular counter. In fact, within the IT space, there are a handful of stocks that are doing well, be it HCL Tech, be it Emphasis. So as far as, 1 year time horizon is concerned, will not be surprised to see the stock, retesting its previous highs of 3500, 3600. So we are a bit on this counter. Yes, in between you would see some sort of, consolidation happening in this counter. But overall, this stock has been maintaining sturdy structure, series of higher lows can be seen in all time frame chart. So recently also stock has already given a decent recovery from the levels of 2600, 2650 kind of mark. So we would expect this rally to continue with a 1 year horizon, 3500, 3600 clearly on cards.
Okay, that's the view on Emphasis, looking encouraging on the charts. Next query is coming in from Kartikeya Singh on Deepak Fertilizer. This stock has doubled in the last 6 months. Is it time to take profits here?
At least partial profits taking off the table is a good strategy, a prudent strategy, because stock has already given massive rally, in probably 3 to 4 months stock has already doubled, and now short term momentum oscillators have entered an extreme overbought territory. So at least partial profit booking is advisable, and for balance positions, one can keep a revised stop loss around 950, because we are seeing a strong support, that is forming around 950, 930.
Okay, that's the view then. Hope that answers your query on Deepak Fertilizer. The next query is coming in from Pon Rajesh on Chronox. He wants to know whether one can enter into the stock for the long term. The stock is up 6% in the last 5 sessions, and even on the monthly charts, it's given a double-digit returns. Should one enter at these levels, or should one wait for some bit of correction?
See, I mean, historically speaking, we do not have sufficient data to analyze it. But the limited with the limited data, we can see that 160, which was previously acting as a resistance, has been broken out with sizable volume. So till the time this particular stock, holds its important support of 155, 160, one should certainly stay put. And on the higher side, 185, 190, these are the important levels to watch.
Okay, that's the view on the stock. But before I go on to the next query, I want to ask you your thoughts on a Medi Assist. There's been a large trade here. 13.5% equity has exchanged hands at 612 rupees in the block deal window, which has been at a discount to yesterday's price. But what should be the outlook on the stock for today in particular? Right now, it's come off from the day's high, up 1.5%. 626 is where it's at. Would you advise this looking at the stock for a trading with a trading perspective?
See, at least for the day, one has to wait for 1 hour candle to get close. As of now, if you see, stock has been, yes, maintaining its positive bias, but historically, there's no sufficient data to analyze its previous trends. But the kind of price action this particular stock has given in last couple of weeks time, at least it seems that 600, 610 is likely to act as a very strong support. And for the day, if this stock again regains its momentum and surpasses 635, 636 zone, we could see this particular stock extending its move towards 660, 665 in coming days as well.
Okay, that's if you want Medi Assist. That's one stock that's in news. But a couple of more queries then. Shiju wants to know your thoughts on HGS, Hindustan Global, Hinduja rather, sorry, Hinduja Global Solutions. The stock has done fairly well in the last 1 month, but off late, last 5, 6 sessions, it has lost some bit of steam. Should this be utilized to look at the stock or to average or in fact buy into the stock?
See, this stock is known for its deceptive moves, but surprisingly, 2 weeks back, this stock gave a massive recovery from lower levels with sizable volumes. So at least in the near term, yes, lower levels like 850, 840, are to be seen as important support. If one has to enter this counter, 950 is the level to watch out for. Wait for a breakout to happen because stock has already formed a good base around 750 now. If it has to confirm its upward trend, that is higher highs, higher lows, it has to surpass 950 first. That would confirm its short-term trend in the upward direction. So rather than buying on dips, wait for confirmation to happen in such kind of deceptive counters. So above 950, yes, this stock can unfold a massive rally. Then 1050, 1100 levels can be reached in short-term kind of perspective. So overall, 950 is the level to watch out for, and the lower side 850, 840 would act as a very strong support for this count.
Okay, that's a view on HGS. Hope that answers your query. Last query, really, we are running out of time on the show. Kiran Singh has just written in, holds 7,000 shares of Elecon Engineering at average purchase price of around, I think, I didn't really get the buy price here. 50 rupees. I don't know if it's 50 rupees or it's a little higher than that. Wants to know what should be done. 7,000 shares of Elecon Engineering. The stock last 5 sessions hasn't done much. Okay, 9% kind of gain in the last 1 month or so. But would you be watching out for any particular levels here? What should one do if they have the kind of quantity that this person has?
See, if the acquisition cost is really 50 rupees, it does not matter at all. Stock has already given, multiple returns. And in the near term, yes, stock would consolidate a bit, but it does not matter, considering the cost. 560, 540 would act as a very strong support. So at least in the near term, till the time this particular stock holds 560 on a closing basis, there is no reason to worry for. Below 560, yes, you can certainly reassess the situation. But till the time it holds, we could see some consolidation with a positive bias in this particular counter, wherein on the higher side, 680, 700 are the levels. So,
Okay. Okay, the person has written in 50 rupees was the acquisition price. But I hope that you've taken note of Sameet's reply and it helps you out. But with that, we are completely timed out. Sameet, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. And of course, also helping our viewers navigate their holdings in this market. Look forward to interacting with you again sometime soon.
thank you.
All right, with that, of course, we've come to the end of this edition of Opening Bell, but we are still in the red. No big moves on the index. It's fairly lackluster, 20% down, 20 points down, I beg your pardon, on the index. 25,260 is where we are at on the Nifty, and 80 points down on the Sensex. The broader markets, holding on. So today seems to be, the mid-cap index seems to be outperforming with gains of somewhere around 0.5%. At a time when the index is trading in the red. But of course, Bajaj twins top laggards today, and in terms of gainers, you have ITC topping the charts. Sun Pharma, Hindalco and Divi's Lab and Cipla are some of the other movers, and so is HUL. So, FMCG continues to do well. Nestle is also on the gaining side. But with that, We're completely timed out on this edition of Opening Bell. Just want to say it's not my birthday today. So whoever thought that it's my birthday is wishing me on the feed, but it's not my birthday today. Thanks a lot for tuning in. Have a great trading day and come back and join me on Closing Bell with Yatin Mota with all the stocks that will be on our radar this afternoon. See you. Have a great trading day.